Greetings traders out there in Traderland. My name's Des here at Grok Trade on Thursday, January 24th, 2013. Well, it looks like Microsoft just now logged some mixed second quarter results. Let's quickly go there. Before we do this, this is the daily chart. Go to a 5-minute chart, and we are down. So for the day, it looked like we closed at 2760 and some change, and we're now at 2722. So down a little bit, not too bad. All right, take a look here at the S&P daily. Now, gang, let's talk about this. I have a nice little breakout, an extraordinary run. If you look at the moving averages, let me blow this up so we can really take a look at it. Look at these moving averages. Those that are a little more solid in color, my 20-day and 50-day. Those that are a little lighter in color, my EMAs, and they're going to be faster. You'll notice that the moving averages are fanning apart. Look at the distance between the 50 and the 20. Distance between the 50 and the 200. See how they're fanning out? Well, that shows exponential run to the upside. Very, very, very strong upside run. Now, the other thing that we saw here is we did pierce over the 1500 mark. We pulled back down. Now we have a doji. With the doji, after a high base breakout run, doji usually signifies a reversal. I believe today, or going into tomorrow, if we go lower than 1490, chances are that will start a down leg. So all the long positions that you're in right now, I would certainly be looking to put stop losses in place, preserve profits at this moment, because we have a very real chance of the markets reversing. If I go over here to the Russell Small Cap, you can see here we got just over 900, but look at the upper shadow here, showing bearish pressure at these highs, pulled right back down. I think that there's a good chance of this wanting to drop. If you look here at the NASDAQ now didn't help with Apple yesterday, but gapped down, popped up, filled the gap, pulled down. So it's in a lot of trouble here, but it's at a support line. Okay, not so bad. But if we take a look at Apple, you'll see that we talked about this big bullish formation, the falling wedge, but we never hold over earnings. This is actually something that we teach in a small segment of one of our 3-day immersion programs in the mentoring, that we never hold over earnings, and here's why. Because as soon as you think it's going to do something great, it blows up in your face. So it gapped down, did a little pop, and then continued down. Now it rests at 450. Now there's some groups out there, such as the S&P Capital's Kessler, saying that, hey, this is a strong buy right now for Apple. I don't think it's done yet. It may bleed out a little bit here, but if you see extreme volume move in, that could be capitulation, and that could be a buying opportunity, and you could find some upside potential. However, Apple needs to fix a few things fundamentally before that happens. Taking a look here at gold, you see that we have a nice little drop here at support at 200-day moving average, but we're seeing some droppage, and it happened on some nice volume. So gold under pressure. And if you look here at the markets as a whole, the S&P was at break even, so there's your doji. The Dow up 0.33%, but NASDAQ off by 0.74%. Russell's up 0.4%. Banks up a fraction. VIX now up 1.85%, now over 12.5%. And gold off by a solid 1.10%. Silver off by 1.73%. Crude oil up 0.43. US dollar flat. So with that, that's what we're looking at. So while we're here, let's also take a look at a stock I've been looking at here is DDD, 3D. If you don't know about the 3D printing that's out there, do some research. But see how these moving averages are flaring apart? That's what I was just showing you in the moving averages, or with the major indices. So with this shows an extreme run, but things that go up fast tend to drop fast. However, this guy, yesterday we had this gap up sell off, but we still held its ground today. This was a perfect time to get a down leg, but it's not giving it. Buyers are still coming into the stock, so it's something to keep an eye on. And Let's take a look at Facebook here. Facebook, we had this bullish pennant, this followed flag, this pinching type of flag, if you will. Nice breakout, a bull pullback, a little pop, but it's a weak pop. I'm not liking that much. Needs to get some legs, so I don't like this run that we're getting on this dissipating volume. So I'm not overly happy with that, but it's tech company, and techs have been under pressure here a little bit, except for obviously Google. Google has been a beast, had this pullback, big gap up on great earnings, and today we came up. But check this out, we had this line draw on resistance, 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 and look where we tagged. So we opened, popped up, tagged that trend line and pulled back. You have to make sure you have your trend lines drawn correctly to be able to make any real sense of the markets. So anyway, it's an art, it's something you have to learn correctly the first time, and then the practice, it really puts you on some great money making opportunities in the markets. But anyway, hey, something I plan on doing on Monday, this Monday coming up, I plan on doing a one of the very most popular webinars, and it will be done that night, 9 p.m. Eastern Standard Time, and I will be doing it on the market internals. So it's really, really good for day traders, and it is the pulse of what's taking place behind the scenes to help you better your trades for more profitability in the market. So be looking for an email. I'll be sending that out, and we'll get it in the calendar of events, so you can get registered for that. Hope to see you on Monday night. Take care. We'll catch you later.